Let's break down rolling. Apple performance. Services are the undisputed champion, surging 15% year over year to $28.75 billion, now accounting for crush them. Total revenue came in at $102.5 billion, an 8% jump year over year. But the real story is the earnings per share, EPS, which landed at $1.85. That's a 5.71%. Mac revenue climbed. What does this mean? More cash in Apple's war chest to innovate and dominate. But can they sustain this momentum? Let's break down what fueled this performance. Services are the undisputed champion, surging 15% year over year to $28.75 billion, now accounting for 28.1% of total sales. That's an all-time record, driven by advertising, the App Store, and cloud services. Product sales also contributed, growing 5.4% to $73.72 billion. Mac revenue climbed 13% to $8.7 billion, and iPhone revenue set a September quarter record. This favorable product mix drove gross margin expansion of 100 basis points year over year, reaching 47.2%. Demand outstripped supply, which suggests volume was demand-limited rather than price-driven. But what about the headwinds? Looking ahead, Apple anticipates 10 to 12% net sales growth for Q. Apple's current P/E ratio stands at 32.6. Services are expected to maintain their momentum at approximately 15%. The growth. Gross margin is projected to be 4x. This exceeds historical averages, reflecting tension given the 16.73% five-year average earnings trade costs. This guidance suggests Apple is confident in its ability to navigate the current economic landscape and continue delivering strong results. But can they deliver on these ambitious targets? Analysts are projecting a strong growth trajectory, but the valuation is stretched. Apple's current P/E ratio stands at 32.76x, with a forward P/E of 28.78x. The current PS is approximately 9.1x. This exceeds historical averages, reflecting tension given the 16.73% five-year average earnings growth. Analyst targets average $285, but models cap fair value lower amid saturation risks in China and hardware cycles. Is Apple's current valuation justified by its growth prospects, or is it overvalued? Here's the bottom line. Apple delivered a strong Q4 2025, driven by services and iPhone revenue. Management's guidance is optimistic, but valuation is stretched. The bull case rests on continued services growth, AI-driven innovation, and successful product launches. The bear case highlights valuation risks, potential regulatory headwinds, and increasing competition. Key metrics to watch going forward include services growth rate, gross margin, and iPhone sales in China. Remember, this analysis is for educational purposes only. This is not investment advice. Always do your own research and consult with a licensed financial advisor before making any investment decisions.